Bitcoin has just broke $60,000 for the first time in over 2 years. In fact, the last time Bitcoin traded at these levels was in November of 2021, shortly after it reached its all-time high. And with Bitcoin at the $60,000 level today, compared to Bitcoin at the $60,000 level near all-time highs, is this time sustainable? Has anything changed?
Should we be confident that this is going to be sustained this time around? What's different now compared to several years ago?
Historically, the way that this has evolved is that net new buyers drive more adoption and market cycles. And I think the question to ask is, who are the net new buyers in this cycle? And the net new buyers is the global financial system, which is a very, very big group of net new buyers. The Bitcoin ETF is just an initial offering that allows the global financial system to have basically investment rails, payment rails, ways to put capital towards cryptocurrency and towards Bitcoin within structures that they find comfortable for them and normal and something that they can do from a risk point of view. So I think if you look at the total net new market that's opening up through things like ETFs and you do the basic arithmetic on that, then even within certain conservative estimates, you can see that there's still a lot more value that can flow into not only Bitcoin ETFs, but other cryptocurrency ETFs. And in my opinion, that's really just the beginning, because the next stage is then asset tokenization, where banks see all these inflows into ETFs, and then they make assets to compete with the ETFs or to get some of that capital.
So the largest asset manager in the world continues to aggressively buy Bitcoin. BlackRock Bitcoin ETF shatters inflow and volume records. Holdings now exceed 141,000 Bitcoin, and they're not stopping. In fact, this is the second consecutive record-breaking day with over 1.3 billion in trading volume. And BlackRock is not the only Bitcoin ETF issuer. In fact, all 9 spot Bitcoin ETFs see over $2 billion in volume for the second straight day.
Yes, I would say that's a watershed moment where the top asset managers in the world, the biggest asset manager, many of the other large asset managers have gotten to a level of comfort with the asset and the legal dynamics around the asset that they're willing to put out very structured financial products. That's definitely a watershed moment that if you talk to people about 5 years ago even, I think they would have very serious doubts about that possibility. And that watershed moment is basically a way for a very large market to access cryptocurrency. And the size of that market, I think, isn't fully understood by even the average consumer or even some of the other institutions. I think it's really quite a massive market.
Now subscribers of Altcoin Daily were ready for this. We literally shared with you the potential of Bitcoin, like here, like here, like here, and even here before BlackRock announced. Like seriously, you can go down to our most popular videos and see over 10 months ago, we shared with you BlackRock CEO Larry Fink secretly investing. Again, 10 months ago was right around here. If you've subscribed to Altcoin Daily, you continue to do well. But now that we've breached 60K and appears we're pushing higher, what's next?
There is another trend of real-world asset tokenization.
Co-founder of Chainlink, Sergey Nazarov, explains how big this moment is and how crypto's not stopping.
Where banks are basically going to do another wave of securitization, but now it's going to be called tokenization. And the massive amount of things that can be tokenized extends from their core business of money market funds, interest-bearing assets, to the more cutting-edge things like carbon credits, real estate, private equity tokenization. So really, I think the offering of already existing cryptocurrency products in a legally compliant wrapper is meeting current client demand because they understand what cryptocurrency is. And the next stage is not for asset managers and banks to simply repackage existing cryptocurrencies, but to make their own tokens.
So while Bitcoin is running now, in a bull market, altcoins are next. And haters in general are in disbelief.
It's depressing.
I don't want to...
What has Bitcoin ever done for mankind? Are you ever a Bitcoin phone? Watson, come here, I need you. I mean, what is it?
Well, coming up, United Healthcare
Revolve?
is apparently...
And altcoins. The altcoin market capitalization is still lagging behind. That's usually what happens when strength is surrounded by Bitcoin alone. However, once Bitcoin is going to stabilize, it seems likely we'll have a potential 2x on altcoins to come. Wow, a 2x would be incredible. That would put Solana at over 200, Cardano at over $1.20, and Chainlink and Polkadot at over $40 and over $20. Is this possible? Comment down below. Solana eyes $600 target in upcoming crypto surge because in recent quarters, Solana's increasing on-chain activity points to a strong underlying demand for SOL tokens. Obviously, price could do anything, but with increased on-chain fundamentals, do Solana's fundamentals support bullish SOL predictions? Well, TVL is on an uptrend, the most we've seen since the end of 2022 when the bear market started. And looking at Solana's network usage, the network's average daily fee payers during Q4 of 2023 surged 103%. In the same period, its average daily DEX volume rose almost 1,000%, with also a 359% increase in average daily NFT volume. News today in the Ethereum L2 ecosystem. Cody has announced their DevNet as well as growth fund. Just as a reminder, Cody V2, powered by garbled circuits, introduces a 1,000 times faster and 250 times lighter privacy solution that can be operated on any device. So they're aiming to be the dominant ETH L2. And the news today is the Cody Foundation will bolster the growth of the Cody ecosystem using its substantial development fund. The first step will start with the upcoming developer network, DevNet, to be launched in early Q2 this year. So to incentivize developers to come to Cody, and along with their upcoming grant program, will allow developers to experiment and build with the technology and be rewarded for their contributions. And again, they're using the same programming language as Ethereum. Using the familiar smart contract language Solidity, developers can bring privacy to existing applications or innovate by creating brand new use cases for the ecosystem. Another piece of news comes out of the Do Your Own Research DEX, or Dior DEX. We are advising for this project. A basic way to think of this would be a much easier to use DEX tools. Obviously, DEX tools is very popular. It's just not ideal for average people, kind of complicated. I loved this clip on how user-friendly it is.
How user-friendly is it? Because sometimes these things are so complicated that you just get so frustrated. You're like, I don't want to deal with this.
Yeah, our graphics designer actually works for Adobe. We want the Apple feel of crypto, right? While it may be less technical, it is easier for the general person to use and understand the UI UX. And that's really our goal, is to be the most technical and performant and actually make it how you want to be able to see it, right? If you're looking at transaction history, you can turn on like, oh, I want to see what the price is, but you can add in like, okay, what is the market cap change between these two trades? What's, what's the holder count difference? What does this mean in terms of, X, Y, and Z? I mean, you're going to be able to completely customize dozens of settings for every different feature set that we release.
My name's Austin. If you're wondering, should I buy cryptocurrency today or wait for a bigger crash? Understand nobody can see the future. Bitcoin has already crashed $3,000 compared to $63,000 where it hit earlier today. And of course, we've seen crashes along the way. Dollar cost average is always the best way to go. But my name's Austin. Click subscribe. See you tomorrow.